Let's bring in JP Maroney, founder and CEO of Harbor City Capital. JP, thanks as always for coming on to talk markets. This quarter obviously been one that many investors would just as soon forget. What's in store for Q2?
Yeah, it's been a roller coaster ride. It's funny, I heard a quote the other day in a TV show said roller coasters are fun in an amusement park, not so much in an investment portfolio. And March was pretty rough, pretty good. But here's the deal. When we look ahead to April, I don't know. I mean, listen, I know the president keeps saying this. A lot of people keep saying this. We've got a whole new set of rules here. We knew that this year was going to be volatile. We have an election year, then we had the oil prices plunging, and then now we've got coronavirus. I'm talking about this and calling this America's economic triple threat lately. We are in a situation that we've never seen before.
I do appreciate the honesty just in terms of how uncertain these times are. Given that, what are you advising clients right now?
We've been talking for the last few months that investors should expect some kind of correction. We didn't expect it to happen this way, or for coronavirus. Obviously, no one could predict that as the trigger event that caused this. But we've been telling people for a long time, take some of these winnings off the table and do some things with it with fixed income. But now investors are forced to make some really tough decisions, and some are being forced to make some really painful trades. We're telling folks, if you have the opportunity to take some off the table and to be able to put it into fixed income, something that that you can count on, that's predictable and reliable, like we've been doing at Harbor City with the secured bonds, something that can give you some sort of reliability. And it really goes back to basic investment principles, because some people, if they're younger, may not need to do anything. They might just ride this out, because we know these things come back. It's just a matter of how long it'll take to come back. And often, right, we have a short downturn in the market or volatility like this, and then things smooth out. But we are certainly overdue for something that could be an extended downturn or slowdown in the market. And if you're at a retirement age, well, you may not be able to afford to wait, may not have the runway to come back from this. And so you might be looking at other assets that you could liquidate, that you could put into something that can give you the kind of income to be able to maintain your lifestyle.
I want to look forward a couple of days, JP. We're going to get this brutal 1-2 punch this week. Weekly jobless claims on Thursday, and then the March jobs number, that comes out Friday. And that's going to be the end probably of 113 straight months of jobs being added to the economy, which was just such an incredible run. How do you suggest that investors digest these numbers when they come out?
Number one is, we always say the rule number one in this is to make sure that you don't let your emotions get the best of you. Unfortunately, people buy at the wrong time. They sell at the wrong time in most cases. And there's an old saying that says, never try to catch a falling knife. I think people who are trying to predict where the bottom of this thing is are going to come up with very bloody fingers over the next few days. So looking at the numbers, you've got to at least hold the line and figure out where you are as a person. What can your portfolio tolerate in terms of risk, and what can it tolerate in terms of a long-term slowdown? But as you see those numbers come out, you can't let them get the best of you and make really bad or dumb decisions.
All right. Great advice. JP Maroney of Harbor City Capital. Thanks as always for joining us. Appreciate it.